Good evening, ladies and gentlemen. My name is Umbreen Sheikh, and I'm a Programs Officer at Community Jameel. I'm delighted to welcome you all here today for the 5th edition of the Ocean Innovators Platform here at the Jameel Arts Centre. Your hosts this evening are Prince Albert II Foundation of Monaco, of course, Community Jameel, and 1,000 Ocean Startups. This event has also been made possible with the support of SOA, Solar Impulse Foundation, Builders Vision, Una Terra, Climate Impact, Systemic Capital, and Blue Action Lab. Also, a huge thank you to colleagues here at Art Jameel who have facilitated making this event possible and hosting us here in the beautiful venue. The Ocean Innovators Platform, as you all know, is an event dedicated to cutting-edge technologies and inventive solutions, aiming at conserving the world's oceans and seas and marine resources. Its purpose is to highlight the essential role of entrepreneurship, innovation, and investment to develop a sustainable blue economy. So, to open proceedings here, we will have a panel discussion, as you can see on screen, on blue capital, discussing how we can invest for impact on the ocean. I would like to now invite moderator of the panel, Alfredo Giron, and welcome him and the panelists to the stage. Thank you.
Hello, everyone. Thank you so much for being here. It seems like a long ride from the blue zone, so thank you to everyone who made it from there. Today, I had a script of what I had to say here in the beginning, but I'm going to cut to the chase very quickly. We are very proud to have had the opportunity to partner with all of you throughout the last couple of years. This journey of the 1,000 Ocean Startups that started just 2 years ago, and as we were highlighting in a few sessions over the previous days, has grown so fast, has attracted such a large community, and is starting to give us visibility on some of the really difficult questions that we have to address together. And so when we were preparing this event, one of the things that we were trying to think is like, what are we trying to get out of this? What are we trying to get out of this amazing panel that we were able to put together? And thank you so much for agreeing to be part of this. And the big question that we had is, what is the end game? What are we trying to achieve by 2030? Is this an exercise of promoting entrepreneurship? Is this an exercise of achieving something transformational in the ocean economy? Is this an exercise of saving the ocean? I mean, those are very big answers from me, but it's a real question. What are we trying to do together here, and what we expect to achieve by 2030? So with that, I just want to highlight that we are very thankful. The World Economic Forum has invested a lot of resources over the last few years in ocean innovation. We truly believe in this. Through Uplink Ocean, of course, in the beginning, many of you have been our partners on that. And now through the 1,000 Ocean Startups hosting the Secretariat, among with our partner organizations. And we are very happy to have had that opportunity. Thank you for that. So with that, let me get started with the panelists, because you are here to hear from them, not from me. And I will start with you, Anne-Laurence. Thank you so much. Anne-Laurence is the Deputy CEO and Head of Private Equity and Natural Capital at Mirova. She's in charge of developing the real assets unit in Europe and emerging countries, has played a pivotal role in highlighting the importance of responsible financing that led to the creation of a business unit within Natixis, asset management dedicated to responsible investment, and which later developed into Mirova. So we just want to dive a little more into the Athelia Sustainable Ocean Fund. That was one of the first dedicated ocean investment funds to close, doing so with 132 million and exceeding your initial targets. So what led you to build this fund and take this leadership? And what were some of the challenges that you faced in the beginning?
Thank you. That's a very holistic question. So basically at Mirova, we are an asset management company dedicated to sustainable and impact investing. And so at that point in time, so 8 years ago, we had developed pretty well in listed equities, in green bonds, in renewable energy infrastructure, so kind of traditional asset classes. And we wanted to go to do more in frontier asset classes. And one of these was natural capital. So invest not only in climate, but also in nature. And to do that, we developed 3 investment approaches, one for sustainable oceans, one for sustainable land, and one for environmental assets that actually deliver carbon credits or biodiversity certificates. And so out of the 3 themes, I must say oceans was the most understood and overlooked, which is impressive, because when you think about the billions of people for which it's critical in their life, the risk that we see related to overfishing, to bycatches, the marine pollution. So you're just like, how can we overlook such an important theme? And so that's how we got into it. And I can develop further in what we decided to invest, or I can do it later. How you prefer? You. Okay. So basically, what we the themes we identified related to sustainable oceans were actually threefold. One was sustainable marine resources management. The second one was about marine pollution mitigation solutions, and the third one was about marine protected areas. So in sustainable marine resources management, you think obviously about sustainable fisheries, okay? Sustainable aquaculture, okay? Then you also have aqua technologies, so to help shrimp aquaculture, to help precise fisheries with underwater cameras and so on. You have also alternative food related to marine products, like using upgrading byproducts for salmon or shrimps, and doing from that hydrolysates, or doing insect protein that is actually replacing fish meal or soy meal for aquaculture, but not only. So that's in the pillar of sustainable marine resources management. In the pollution mitigations, there are a diverse set of investment opportunities which are related to oily waters treatment in ports, or plastics recycling, typically gathering used plastics on shores and recycling them. So the PET water bottles that are recycled into shampoo bottles for Garnier and Body Shop, or recycling old fishing nets that can be transformed into textiles for sports wear, typically for Patagonia. So you can see that when you think about plastics recycling and used water recycling, there are a lot actually that you can see. And then the last theme is about marine protected areas, where actually it's difficult to invest because it's not for profit, so to say, projects where actually the revenues are related to grants, to ecotourism, and to blue carbon revenues. So here it's a very tiny portion of our investments, because it's not super profitable as an investment, but also because there are very limited investment opportunities. It's very difficult to find those investment opportunities. So all in, we ended up with 16 investments across the world, developed emerging markets. And we've learned a lot, and we see that there is so much to be done, and the impact is phenomenal. You can think, of course, of biodiversity, like we help preserving fish stocks, we help avoid overfishing and finding replacement solutions. We preserve the biodiversity of the oceans by avoiding pollution. We also help mitigate climate change with this recycling option. And of course, we improve the local livelihoods revenues. So it's a fund that where the goal was obviously to have those three categories of impact alongside financial return, but acknowledging also the fact that it's a frontier kind of investment strategy. And this is why we had a blended finance approach with de-risking mechanisms from USAID.
Thank you. Thank you so much. And we will get back. You started mentioning some of the challenges. We will get back to some of those in a little bit. And one of them is the profitability of some of these things, right? Next, let me turn it to you, Marisa. And I think here is where we are going to pick up some of the threads about how do we tackle some of those difficult ones that people might think that are not ready, but that people like you have made ready. So let me introduce you first. Marisa Drew is the Chief Sustainability Officer at Standard Chartered Bank, and she has over 30 years of experience developing innovative instruments, most recently from Credit Suisse, where she held several sustainability-related roles, including serving as the Chief Sustainability Officer and CEO of the Impact Advisory and Finance Group. And just to give you a perspective on the type of question that I want to ask you, yesterday I was having a conversation with Marisa, and I was so impressed by the way in which you have achieved creativity and materializing that creativity into some concrete tools. And so my question to you is around that. Standard Chartered has set out ambition to provide 300 billion in sustainable finance by 2030. How much do we expect to see flowing into the sustainable blue economy? And how are we going to get creative about this?
Thank you very much. I think creative is another word for just being a rebel, because where I started on this journey back in 2017, coming from a very traditional capital markets and investment banking background, moving into the field of sustainability, the first thing I set out to do was to try to map, because I had no other frame of reference, was to map the UN Sustainable Development Goals. And I set my team out to say, where is the capital flowing? And then where can we be additive to that equation? And to my shock and horror, it's now the oft-quoted statistic everywhere, which was the UN SDG 14, Life Below Water, we found was the second least invested of all the SDGs. I couldn't believe it. And I kept saying that number has to be wrong. And I went and sent my team out to do the math again, and it kept coming back pretty much with the same answer. And so it was a moment for me to ask, why is that the case, given how critical the oceans are? And this does lead to an answer to your question, but when I started to then pull those with big pools of capital, because I'm in the big capital game. Mobilizing capital at scale is what we do in a large financial institution. The feedback that I got was the oceans are uninvestable for commercial return. Like, okay. I love it when people tell me something can't be done. I'm like, bring that on. So the way we did it inside a very large bank, and this is not an easy task, but I was in an unfortunate position to have a little bit of leeway to play around, as I say, or experiment, was I said to my teams, let's think about, and in our business, we should spend 80% of our time in the climate space doing what is working well, so scaling what is already working, and that was largely at that point in time renewables, wind and solar, and the beginning of EVs and what have you. But I want us to create the space, the headspace, for us to spend 20% of our time on things that were basically hadn't been done before, or we were going to try to go after things that were stuck problems. And that's what led us into the ocean work. So then we started to poll the investors and said, well, do you care about the oceans? I mean, if it were investable, would you care? Are you invested? And if not, why not? And the answer that we kept getting back was, we don't believe that we can get a commercial return. So that was reinforcing that point. And the second thing was, and we've never ever seen an investment that speaks to our needs as investors. Now, I'm talking about institutional investors moving capital at scale. And so that typically leads you to the liquid space, unlike Anne-Laurence. And by the way, huge fans of what you all have done. And we actually put you on our shelf way, way, way back then, our product shelf at my old firm, because we had a bit of an open source platform trying to get people to think about investing. But it was a little early days. It was hard, other than, I would say, very prominent individuals who were quite passionate about the space, because it might have been something they were doing philanthropically, and they would say, I'll lock a little money away in this space. So it was early days. So we went to the far end of the other spectrum, and we went to the liquid markets. And then when I said, let's go into something where you can trade in and out, which I could at least convince big institutional investors to participate, they said, well, yeah, but I don't really see the linkage between my dollar and the outcomes for the oceans. And then that led us down to a place which is called shareholder engagement, where your capital is predicated on a company changing its behaviors. But then we had to go all the way back to science, and this was us rolling up our sleeves, just attacking everything. Sometimes something came up to us, we took that hammer and batted it down and went to the next one, and the next thing popped up. And so then it was, well, we don't know how to, what to do. So if you're investing in a company, what are the 2 or 3 or 5 things that that company can do to be better ocean stewards? So we turn to science and we turn to NGOs, which normally they are unusual partners for a bank. They're usually telling us that we're bad people and we're not going fast enough and we're funding all the bad things in the world. In this instance, we said, well, you know what? We know what we do well. We can structure transactions and we can mobilize capital. What we don't know is what works on the ground. That's what you do. So why don't you come into a deal with us and partner? And it was a moment for us to actually bring climate scientists and NGOs into the same structure, where we would then go to companies and say, our capital's predicated on you doing 1, 2, 3, or 5 things. And it was amazing, because at first we thought, are the companies going to care about this? And the reality was, because we're burdening them, we're making them do other things than their day job. And yet what happened was, it was a beautiful marriage. The companies that wanted to be better ocean stewards found us as much as we found them. It all kind of came together. And then these companies said, we're prepared to do it, and please give us the capital. And for us and for the institutional investors, it was a win-win, because we created behavior change, which led to real outcomes for the ocean. Now, ultimately, getting back to your question, what's my big vision would be being able to mobilize capital at scale to preserve our oceans in a sustainable way. And I 100% believe there's an enormous need for philanthropy. But if we are going to create sustainable long-term models, I do believe we need to create a commercial viability, a commercial return, because that is self-sustaining. You don't start at zero every time you've given the money away. Now, fast forward to my new role at Standard Chartered Bank, and I've got a whole new set of challenges, because we are a developing markets-focused bank. So our footprint is principally, our nexus is Asia, Africa, Middle East. And if I look at my footprint countries, the issues that they're facing are existential. I mean, it's all existential for us, but particularly so. And then I look at their economies, and so much of the GDP of many of my countries is predicated on healthy oceans, whether it's maritime or fishing or what have you. So we've had to reframe the narrative again. This is not a government job. It is an imperative and a necessity, and necessity breeds commercial opportunity. So the final thing I'll say is that in my experience building asset classes for many years in the capital markets was, if you want to mobilize capital at scale, you have to have a common language, you have to have a common set of market-adopted standards, and you have to be able to create the investment proposition for people where they believe they can get the return. So we worked very hard with the UN to come up with the investable sectors in the ocean. And the first step was to call the ocean an economy. It wasn't done 7 years ago, the ocean economy. We said, if you look at all the goods and services that are in the ocean, 7th largest GDP in the world. That has got to be investable. And then we said, what sectors? And it was offshore wind and aquaculture and all of this. And we created the framework and the guide for that, and the Blue Bond principles and all the things that we're using now today as tools. But those early days was a lot of pioneering, and we had to have that space to be creative and to invest the time to work on every single one of those things that cropped up that became hurdles that we just said, we know where we want to go. To answer your question, we got to get there, and we're going to spend the time to make it happen.
Thank you so much, Marisa. I think 2 things to highlight from there. Well, many others, but 2 things to highlight from there. 1, that space for creativity and to really put the resources behind that. 2, it seems like you just launched a challenge to this community, which is we need to continue working on that common language, set of standards, investable opportunities, and really identify those verticals.
And good examples.
And good examples.
Good examples on this panel.
So this is a challenge to the whole community on how do we get out there. Thank you so much. And the other thing that she mentioned that I think takes us to our next panelist, James, is the role of philanthropy in catalyzing all of this. But let me introduce you first. James Lindsay is an investor at Builders Vision, where he co-leads an ocean-focused fund that has invested in over 55 VC and private equity vehicles and early-stage startups. He also runs a fund focused on providing catalytic project financing for first-of-a-kind technologies that could mitigate climate change. So just to keep it brief, but James, based on that question, and many of us are familiar with the innovative approach that Builders Vision takes, can you tell us a little bit, what is the role that you play in the whole ecosystem? What is your approach? And really, what Marisa was saying, there's this need for philanthropic money, but it needs to get somewhere. Can you tell us about your approach to that?
Well, we started off seeing a lot of these promising managers come to market and face tremendous hurdles getting started. No one was willing to write that first check. I think you lived and breathed that for several years, and we saw that and realized if no one comes in, who will start this movement? We're quite privileged. Our principal has always been very interested in ocean sustainability, and he's always been focused on making market-driven investments and grants, which led to what we are doing today. So oceans is actually a very simple problem for us to think about. We're just trying to accelerate the blue economy becoming an asset class, which is actually a little bit easier than some of our other areas that we focused on. So we spend a lot of time thinking about staking these first-time managers, staking subsectors that most people haven't thought about yet, and this could be something like coral restoration, and we have an entrepreneur in the room who started this, 2018, 2019? 15, even longer, and faced just tremendous hurdles trying to turn this into a business. Classic philanthropy was willing to be supportive, but at the end of the day, it needs to be a business if it's going to thrive. So we've gone through a few different journeys. We started off really just thinking we're here to ignite. We're here to find these first-time managers, get them into market, let them scale, and see who can come in with us. And it actually happened faster than we thought it would, as in others coming in with us, which was phenomenal. We're probably 3 or 4 years ahead of where we thought we would have been when we started this more aggressively in early 2020. So really great traction so far. Now we're trying to think, how can we fill the rest of the gaps of the market? It's not just early stage venture that needs to exist if we want to see impact at scale. There's, I think, 37 ocean-focused managers out there right now, depending on how you want to call what is impact versus just generalist. It needs to be probably 200 just today, not where we need to be by 2030. So we're still very behind per the SDG goals, per any other metric we want to throw out there. So when we think about this means we need to start thinking about how do we either pull in later stage investors, how do we provide things such as first or second loss provisions to excite those that would not be willing to take that risk. And we're doing this with actually non-philanthropic capital. We are using tax dollars. It's not grants going out the door. We have return expectations. I am lucky that it's flexible based on what asset class it is, so I can adjust to different risk profiles. But we do have return expectations. If we did not, we don't think we could be encouraging others to come in with us.
Thank you so much. I think a little bit of a reality check, but at the same time, it's really important because as we have seen throughout these examples, it is possible, and this is something that is growing, and it is something that there's a lot of examples that here. So with that, let me get to you, Régine. So Régine is the CEO of CREO, and a dedicated champion to catalyzing private capital into low carbon, resource efficient, and environmentally sustainable solutions. She joined CREO Syndicate in January 2016 as the inaugural CEO to lead the growth of the organization that now fosters and supports a community of wealth owners and family offices collaboratively developing and investing in sustainable solutions. So now that you have more than 200 members who are actively investing in areas of climate, energy, food and agriculture, and ocean, can you tell us how the ocean fits with your mission to catalyze that 1 trillion target that you have? And what kind of tractions is your ocean, seafood, and aquaculture investment consortium getting with your members?
Of course, thank you, and thank you for inviting me. And it's great because I've already met 2 new contacts that I definitely want to follow up with because I didn't know that you were doing what you were doing. Builder's Vision has been a very important supporter and contributor to CREO, so we know Builders very well, and thank you again for supporting the Oceans program in CREO. So CREO is a bit of an unusual organization. So our mission is to both mobilize by our family, so mobilize capital into climate solutions and decarbonization, but also catalyze capital into the space because of the unique characteristics and flexibility of families. We just heard from James that yes, you have return expectations, but you have flexibility. And so families can play a really unique role in investing in the space, in de-risking the space. And when we say de-risking, it can be de-risking by investing in early stage technology. So we're much more at the edge. Probably about 60 to 80% of our time or dedicated capital goes to the edge as opposed to like scaling the solutions. But families can also decarbonize. Our families own and operate over 400 businesses with revenue over $500 million, and those businesses also need to decarbonize. For example, we have 18 shipping families in CREO. They own and operate 6 to 7% of the global fleet and 5% of the global tonnage. That's an opportunity to work with our families to be early signals in the marketplace for things like green ammonia and green methanol. And so families have a lot of opportunity to work in this space. So we cover every sector. Oceans, so we were launched in 2011. You can imagine that our portfolio has been really around back then in clean tech, energy, then 2017 started food. It was really in 2020 when builders launched Oceans that builders came to us and said, why don't we fund a position just to do oceans and really explore whether you're able to work with your families to deploy more capital into the space? It was not something that we were doing very proactively. And so we launched a program called Osaic. So it was 20 initially of our families, so 20 of our 200 families were investing in the space at that time. And our goal was $250 million into solutions, leveraging mostly commercial capital, but we were allowed to do philanthropic capital as well. In 2.5 years, we reached $312 million deployed into the space with 35 members. Today, we have 48 members of 200 who are investing in oceans, but it's still not nearly enough. And really because we may forget or we need to be reminded that the oceans is our biggest carbon sink. Always has been. It is the natural carbon sink that sequesters the most carbon of all of our natural resources. We need to make sure that it can continue to do so. Shipping is 80 to 90% of our global transportation for goods. It is absolutely crucial to the economy. It is also an energy source that is becoming more and more tapped into, and it is also the frontier for new materials and foods, right? And so it is critical. And the fact that CREO is only 25% of our members are investing in this space is just not good enough. And we work very closely to try to encourage them to do more. The other challenge we face is that as we look at deals, so part of what CREO does is we do deal origination for the families as a nonprofit. So it really is just data that we bring to the families for them to make informed decisions around where they want to invest. And out of 1,200 deals we reviewed this year, only 85 were in oceans. And part of it is because we're still developing our network. It is a more nascent network, but part of it is that entrepreneurs and fund managers and others are not really thinking about this space as an investable space yet. So we have to build not only the plumbing for the connections and the information to flow, but we have to build the solutions and all of the other pieces that come with a robust proposition. So the areas that we've seen most investment by our members, early on with Osaic, it was sustainable aquaculture was really the space that we saw most dollars deployed. In 2023, we saw a lot of economic and policy challenges and headwinds towards sustainable aquaculture, especially in Norway, in the US, and Canada, and it has slowed down some of the investments in this space. On the flip side, we saw a very material increase in interest and dollars deployed in ocean CDR. So this is ocean's alkalinity enhancement and electrochemical solutions for leveraging the ocean for decarbonization. But again, that won't really work. That is not necessarily an investable opportunity if we don't have well-functioning carbon markets. And so we're also working on trying to ensure that voluntary carbon markets are functioning well. We do have a lot of families who are deploying philanthropic, concessionary, and investable dollars into the space as a side kind of strategy for supporting oceans. I'll just note that shipping, we've seen definitely an increase. We have over 50 shipping technology companies in the portfolio. Seaweed has been another challenging one. We're seeing a lot of capital being deployed in seaweed, but not the type of capital we need. So not enough at the upstream level and not enough of debt for actually financing the equipment that we need for seaweed. And then data. Data is the other big piece. The interoperability of data. We talked about this yesterday on Ocean Explorer. There is data out there, but it doesn't connect. It doesn't talk to anyway, very well with one another. And so it's very hard to use this data, and we need this data for monitoring biodiversity outcomes. We need it for the blue carbon, to value blue carbon, and insurance companies increasingly so need this data. And so we're definitely looking at opportunities in that area as well.
Thank you so much. Marisa, I saw that you were going to come into the how do we bring other types of capital into this, but let me add one more question for you in that one, which is, and how can this group use its spheres of influence to do that?
So I just so love this because I can bring all the threads together. As you were talking, and I swear to you, we just met today. So we weren't teeing this up with each other. But when I was talking at the very beginning about standards to scale capital, one of the great successes in my mind was the shipping industry, because we, as now I'm putting my banking lending hat on, we lend in my markets. The maritime industry is a huge component of the Southeast Asian economy. We said, if we're going to, we've committed as an organization to net zero. And if we're going to achieve net zero, those we lend to must be on the same path, or every time we lend $1, we're cutting against our own commitment to get to net zero. So if shipping, which is a huge part of our portfolio, is not on the trajectory, we have a problem. So initially, back to the everyone said it can't be done, and when I went to the shipping companies, I said, we need to help you decarbonize. Can't be done, can't be done. We don't have fuel that will fund the ships that is green fuel yet. And that was so far in the distance. We said, well, what if we collectively, industry-led solution supported by financial services, come together and create a set of principles that could be around decarbonization? Again, I know what I know. I do finance. You guys do ships. There must be some things that you can do in your sphere that would get you down. We sat around the table, and what did we do? We created something called the Poseidon Principles. And the Poseidon Principles were a set of things that you could do, and I don't mean big tech innovations. It was tweaks to your ships that could make them more efficient from a carbon emissions point of view. Industry adopted solution. It wasn't a regulator telling you what you had to do. And everyone who used to say it can't be done, what happened? One shipping family said, you know what? I'm going to get it done. And it was Maersk, and they came out and they had a big statement. It hit the world stage, and all the other shipping companies went, what? What was that? You know, because it's a competitive industry. And all of a sudden, everybody started to look at their entire fleet. What could they do? It was the paint they used. It was the bow thrusters. 1000 Ocean startups have an investee company, I think, that puts sails on a cargo ship. Who would have thought about that? Yet it reduces emissions by 30%. It wasn't reliant on the breakthrough in hydrogen or ammonia yet. So it was amazing. And all of a sudden, it's been what we call the race to the top. And it's just such a wonderful example where industry comes together, and these are large families with a set of principles, with finance behind it. Boy, these are the companies I want to lend to because they're right on my net zero trajectory. Win, 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 win. And then one really quick one on, funny that you should mention seaweed. It was bugging me that there are hundreds and hundreds and hundreds of seafood companies that are trying to mine in all my country markets, and the margins are very thin, and it's a bit of a rocky road. And part of it is because I don't think people have framed the seafood industry in a way that big capital can understand, because I was watching these companies really struggle to get funded. And so I went to my research team and I said, I think this is a massive industry, because when I understand where seafood go, it can be in feed to reduce methane, it can be packaging, this, that, and the other thing. And I said, if we add this all up, I think there's a case to be made. And we just produced, and I would be delighted to share with you, it is called, cute little term, kelp is on the way. And we have, very cute, but we have, in a very seriously rigorous way, we've mapped out the economic proposition for seafood. And I can tell you, if you read this report, the proposition is that your return on investment of getting in now is insane. It'll make all of your private families' heads spin when you think about the ROI that could be associated if we can get this industry across all of its subsectors to scale. So that's another place where we could collaborate together on something as esoteric as seafood. So anyway, just a couple of thoughts on how collaboration can do big things.
One thread that you really emphasize there that we take a big focus on is transparency. Allocators are not original. They never like to go first. And the second they see that a bigger name has entered into an arena, they get very curious. So this really has shown up in a lot of our investment activities. We like to be very early. We think that's been very catalytic for several managers. But we like to be transparent and announce it and be on landing pages and tell the world that we're in. Because almost every time we've randomly had the most unexpected source of capital reach out. And it might be somebody who's working at a pension fund who had a minor in marine biology and sold their soul to go be an allocator and pursue a finance career. But they're like, oh, I've been watching this sector, and all of a sudden this cool fund called Ocean 14 popped up, or SWEN, and I didn't think anyone was going to be serious about it. And all of a sudden, Walton, which has a lot of cachet from a namesake, came in, and it's been really powerful. We think, at least for most of our managers and a lot of our startups, to just be open and to be willing to talk about it on a public stage and not be one of those clandestine offices that doesn't like to be out there.
And you actually encouraged a lot of our other families, because it was a big decision, right, for Lucas to go public, but it's actually increased a lot of interest in our families going public, and therefore we can find our people and do this work. So really great.
So Régine, can you go a little deeper on that? What happened with that example that we could think about replicating? How do we bring up other examples that motivate some of those families to also look at the ocean? Do you have examples of other moments when that has happened? Not only on ocean, like in different issues. Like
yeah. Honestly, I mean, we talk about the magic of CREO. So for the entire economy to transition, you need different behavioral change levers, and one of them is rules and regulation. We know that top-down rules and regulations changes behavior. The other one is norm setting, and I personally believe that you need both for it to work, because even if you have the rules and regulations, there's always loopholes, there's always ways to not be transparent and do things that are not aligned. So really what we feel we're contributing in CREO is creating a community of stakeholders that have a huge opportunity to lead, to be influential, and leverage their assets to decarbonize, to invest, and to de-risk. And so quite honestly, where we've seen a change in behavior or families going from one sector, adding a new sector, or going into a new asset class, because it's not just VC investing. You talked about engagement strategies. Our families start at 100 million in net worth, and some of them are over 100 billion in net worth. Those are big portfolios to manage, and they do become allocators, right? And so convening and having these discussions peer-to-peer, but also bringing outside experts and also the bigger allocators in, like again, this conversation just pre-panel, really want to continue the conversation, because this will also influence our families, knowing that the larger institutions are also doing it, because they take a lot of risks too. They are risk-adjusted approaches. They really roll up their sleeves to learn how to manage the risk, and they're uniquely positioned, because they're not as regulated, to take those risks. So that's all great, but they still want to make returns, right? Because they want to use those returns to continue to invest in these solutions. And so partnering with institutional capital is another way to get these families to be more comfortable. So that's generally. And in oceans, it's just repeat, just how important this natural entity is important to the work that we're doing.
Thank you. Would you like to comment also to that same question? I think it would be an interesting one for you.
Yes, I think these types of investments needs to be a bit more understood. What works well, what is more difficult. And so what we've seen that what works well is technologies that are well proven and well sold. We see very good successes and valuations uplift typically in aqua technologies. So this is this is helping and this is having both impact and financial returns. In sustainable fisheries, to the opposite, or sustainable aquaculture, climate change has negative impact on the yields, basically. So you can immediately see a component that we need to support that, and also being aware that you have an impact on the revenue side. And then you should add other components of revenue, such as the processing, which helps to add value. So I think once you get into the needles, you understand what area can be really boom, what kind of segment can be more fragile, and how you help to de-risk it. And so you really start to segment your business and see where you need actually de-risking mechanisms, such as blended finance more specifically. I think what's important to keep in mind is that in emerging markets, there is a lot of the blue economy, and there is a gap in the growth capital, which is actually a pity, because when a company has overcome the venture stage and come to growth phase, it's actually the moment where you start to be less risky. So I think we still have a lot to do, but I really see the path. It's just about having some bold investors who are able to take the risk because they have convictions, because they have the means to do it. And who are they? They are development agencies because it's part of their mission. They are family offices because they can afford to have their own choices, and they not depend on board members or who will tell them you made the wrong choice, you are fired. And I think in the middle, what is difficult is the institutional investors, because they have their fiduciary duty, their risk-return framework, which we understand, but they forget a little bit the impact notion. And we believe that a right way to analyze investment should be not only risk return, but you add a third layer, which is impact, which is what we are going towards, but it's definitely not there yet in the institutional business.
I hope I can make a play for Ocean Fund, because we have our principals sitting in the room, and we are in part here at the benefit of Prince Albert II Foundation, who is trying, I think, a little bit with a vision for Ocean to attack that space, which is past venture and pre-institutional scale, with the benefit of the foundation being the initial seed capital, the fund, and for full disclosure, I'm on the advisory council, so hopefully we'll help make it happen, but try to attack that space. And I do think we have to, in the capital provision arena, we've got to be very deliberate about where we want to play, because that then helps others find that space to come in. And I think if we collaborate, and there are many collaboration partners here that are in the early venture space, you mentioned Ocean 14, there are others here, that if they start there, then we can come in next, and then somebody else will come in next after that, and then we achieve that big, big vision.
Thank you so much. Can I suggest that we take 2 questions in a row, and then we get back to the panelists. Please let us know your name, organization, and then who are you directing it to, maybe?
Sam Teicher from Coral Vita. The one group I didn't hear you mention, I guess, is angels. And I'm lucky enough to be past that stage, and thanks to some of the people on the stage, there were folks who were willing to write the smaller checks. And I don't mean to pick on you here, because I'm a big fan of Mirova, but a challenge I think many environmental entrepreneurs face. I'm friends with Simon Dent, and so had multiple conversations, but was told the smallest check size we write is $5 million, or at least at that time. And so how can we get also, I think with the knowledge and the influence you have, also the word out to the less traditional investor, so people aren't just thinking, oh, I can invest in apps, I can invest in this thing, but they know oceans also are a space where even if it's the $5, the $10, the $50,000 checks, so that a lot of earlier stage entrepreneurs can get to the more institutional, the more family office level, so that we can see the change we want to see. So that was, I guess, anyone who wants to take that one, but.
Thank you. Let's take the 2 questions together, and then we come back. Is there any other? Thank you.
Good evening, everyone. My name is Mshila Sio. I'm from Kenya. I represent OmiFlow. We're a wastewater treatment company. So my question is for other entrepreneurs here who are from the global south. We have solutions, and we're wondering why it's really difficult to find people like you. So what is the gap? Is it visibility for us? Do we speak a different language? How do we get to jump from angel investing to ticket sizes of, because we have the solutions on the ground. We have ground PhD, and we want to basically scale.
Thank you so much for that question. I think you wanted to reply to the first question, so let's go there. But I think everyone will have something to contribute to both of these questions. So
I think it's a really good question because it's about the whole steps of the development that we need to fund. At Mirova, to be frank, as we are a relatively big shop, we think that our job is to help the scale up. And therefore, if we finance pretty limited tickets, we are not in what we should be doing. So what we are trying to do is to identify a scope of VC fund, so venture capital fund that can actually finance the earlier stage, and then to partner with this VC fund. There are other ways also to help new projects, and that's what we are working on as well, by setting technical assistance facilities, which are actually financed by donors, and they help very young entrepreneurs, young corporates, to frame more their value proposition, and mostly in financial terms, to make it more attractive to investors. So that's my two cents on it.
thank you so much, James.
On your question, sorry, I didn't catch your name, about lack of capital coming into the Global South. This is a major topic for us right now, and for the next few years, we're going to be spending a lot of time thinking about this. And I wear two hats at Builders Vision. I have an ocean portfolio, and I have an energy portfolio. And I'm looking at some energy opportunities in the Global South, and it's a very new frontier for our office. I can reach out to 5 to 10 very well-known think tanks that have access to some best-in-class investors that have been operating there for 20, 30, 40 years. They know how to access the DFI capital. They know how to access private equity players. I don't have that for oceans. Maybe they're out there and I just don't know, and I'm being naive. But that's just a major gap. And that's something that we fund, potentially out of my portfolio. You know, we can make grants as well as investments. And that's something I would really like to see. But we are starting to see more bigger sources of capital coming. The UN Fund, Global Fund for Coral Reefs, will be looking for companies just like yourself. So if you're not in contact with them, hunt me down after. Because the blended vehicles are thinking more about how do we turn off the tap. With wastewater, that's a great example. Huge impact on coral reefs, huge impact on fisheries and everything else in the ecosystem out there. But I really think that thought leadership is needed. Otherwise, the Western family office or philanthropic pool of capital or risk takers, whatever you want to call people like myself, we don't know how to operate. And so for oceans, you know, we can talk to Conservation International, WWF, but they're conservation focused. They're not innovation focused, and you're an innovator. So there's a huge gap there that we need to really think about.
Thank you for sharing that. Again, this is a challenge for this community. I really want to stress that one. 1 minute answers for, please, for Régine and...
Okay, I'll answer both questions, I think, together. So, you know, in the US and Europe, there's well-developed local ecosystems, right? You have angel communities, you have accelerator programs, you have a tech transfer coming out of universities that then go to family offices, that then go to like PE institutional, right? So it's not working perfectly, don't get me wrong. There is a gap in growth stage for sure. But that kind of works. I think what we need to think about is how do you develop those local ecosystems so that those local ecosystems can then tap into the global ecosystem so that you have a voice. And part of what we're trying to do in CREO right now, out of the 200 members, 100 are American, 60 are EU, UK, and the rest are global. And we're working really, really, really hard to try to make connections in emerging markets so that we can help families there who own businesses. Like here in UAE, 80% of the GDP is owned by private wealth, a huge opportunity to tap into that, where family is doing more. So I'd say build the local ecosystems, and we definitely would like to hear from you to see how we can do that on the ground.
Thank you so much, Marisa.
So I guess on the angel side, I would think about trying to tap into, I would call the next gen energy of wealth. We created, for lack of a better term, investing clubs or groups of our ultra high net worth families' children who are passionate about backing climate solutions with young entrepreneurs, and they have the smaller pools, amounts of capital to put to work, and they're arguably more patient capital because they value that impact as much as they value the financial return. So that would just be one thought. You're speaking to me. I'm in this seat because I left my Western institution in 35 years working for systemically important Western banks to come to Standard Chartered because I wanted to get the voice of the Global South on the table. I felt it was missing anything I had been involved in climate. It was the West writing the rules, and they don't work for your markets and our markets. So that's exactly what I'm trying to do, is figure out how do we bring entrepreneurs like yourselves, businesses like yourselves, to the big pool capital table. But we'll start with a little pool first and grow to big. But what I'm finding, this is my appeal to any of you who are allocators or have capital, is that when we're thinking about climate solutions, if you look to the places that are most vulnerable, you find the most fascinating solutions, because out of necessity, I am seeing models that we haven't thought of in the West because we've got plan Bs and Cs and Ds. If you're sitting in a market where there is no plan B and the government doesn't have the money to invest or won't invest, you figure it out. And I'm seeing just an innovation mindset, a resiliency, models that can operate on very little capital that are awesome investments. We just need to get the word out and get you in front of the right people. So anyway, on it.
Thank you so much. And just to echo that, I also come from a developing country. I have lived this. I am with you as well. And I am so happy to see that we have such a strong group of really smart people working on these challenges. And I invite you to reach out. This is also what these events are for and what these communities that are being built are for. On behalf of the Ocean Innovators Platform, and the two co-hosts, the Prince Albert II of Monaco Foundation and the 1,000 Ocean Startups hosted by the World Economic Forum, we thank you so much for being here with us today. And I'm getting it back to the MC. Thank you so much, our panelists as well.